Global sugar supply and demand. I would like to invite Mr. Rahil Sheikh, the session's chairperson, Ms. Kona Haq, Mr. Claudio Kovrig, and Mr. Jian Yu Kao, and finally Mr. Ravi Gupta. To kindly come on stage, please. There is no coffee break. We are continuing the session. Thank you. Yeah, please come on the stage. Rahil Bhai, you coming back. Thank you. Ms. Kona Haq, thank you. You can come this way. Yeah. Mr. Claudio Kovrig, we can start with your presentation. May I invite you, please? Thank you.
Hello. I'm very happy to be with you here. I know for you it could be a lot from the morning with no break, but I hope you can endure me for the next 30 minutes and then the panel. I thank a lot to organizers of this event. Happily we are here together after such a hard period globally, hit by COVID and now by this tremendous war. My presentation today will focus on global S&D, and I added also some trade flow figures, especially for Brazil, India, and the main countries. 2-3 words about me, just short words. I started my sugar career with Jonathan Kingsman. For you that you are older in the industry, of course you know him. And I worked with him for like 7 years. And then the company was sold. I stayed with a new company, and then I opened my own company. We are providing sugar analysis, forecasts, S&D, trade flows, market knowledge, consulting, whatever. So now I will start with the presentation. I hope this works. Oh. What happens? Okay. And then I start with the words of a big thinker of India who solved the problems of many people, delivering them from illusion. And the words are from Jiddu Krishnamurti: truth is a pathless land. This is how I want to do the presentation, in truth. Let's see the global sugar picture. Can you help me? This, okay. So this is the latest chart showing the difference between production and consumption worldwide. The chart doesn't consider the level of stocks, which are locked in at some origins, or which are present at destinations. Now, as we clearly see here, we come after 1 year of deficit, right? And then this year was very unclear here. Were we in deficit? Were we in surplus? Nobody knew for sure where we are this season, because it was a bad year for Brazil, but then India compensated for everything. Nobody was sure about Thailand, Thai crop. At the end of the season, now we see a surplus of about 1 million, 0.8 million tons, and this is mainly due to India, right, and Thailand. Well, Thailand didn't recover too much, but recovered on year. Now, next year could be more. Only if this would work. There is a delay in when I press here. There is a delay. I don't know if you can fix this. Look. Can you help me, please, with the charts? And I will say next slide, please. Okay, so please, from the beginning. This doesn't work. Please put the first slide. Okay, it's okay. So now, as I said, production
picked up, especially in India and Thailand. But then we had another surprise, it was Pakistan. Pakistan produced about 1.7 million tons more than they managed to consume. Now, this sugar is locked in. Why? It's locked in due to the government decision to ban sugar exports. But prices in Pakistan are collapsing now. The currency is collapsing also. So for how long they will keep this sugar locked in? They have elections in October, if the government will resist up to October. So now this tremendous volume of whites is hanging onto the market. Please, next chart. You have to press one time. Now, where do you see the surpluses or deficit, right? So this is the balance, regional balance, right? We have in blue the Americas, North and South. In dark blue is Europe and CIS. And then we have other more in deficit like Asia in pink, and we have MENA. So MENA and Asia remain in a deficit, right? While Americas are constantly in a surplus. Now the surplus varies in the Americas according to the production, because consumption in the Americas is not really picking up, except United States, okay? Next season, due to India, we will be in a higher surplus, and also due to Thailand. So then it's kind of a repeat of this year as we see it, right? Because we never know what will happen. Let's see how the monsoon will evolve, so on and so forth, how the agriculture will evolve in Thailand. So from this point of view, the surplus is not very big, but it is a bigger surplus than this year. So 3.8 million ton surplus. Okay, you cannot compare with the surplus of 17-18 when we had this big bar, 12 million tons of surplus. Okay, can we have this surplus vanished? Can it vanish? It can vanish only if we have a very big pickup in consumption, in world consumption, or if we have lower production in these main countries, India, Pakistan, and Thailand. And here, remember, I didn't mention Center-South Brazil, because Center-South Brazil looks like to be now in a neutral state. Next slide, please. Yes, press one more. World production trend, global production trend. You see, due to higher prices and a good weather, these bars are showing a very big recovery in world production. Well, production stagnated for a while and even dropped due to very low prices that the world market was paying. Look at this, for example. We had a drop here, a big drop from a big increase. So the market reacted a bit on lower prices, right? Okay, it was also bad weather, you would say. Yes, it was. But everything was combined. Now we see a pickup in production. Next chart. What about consumption? In terms of consumption, there was also a surprise to the upside. Even if China is in lockdown, 400 million people are in lockdown, now we saw recovery in consumption this season of about 2%. It is a big number, because 2% we only had pre-2015, yeah, here. So where consumption picked up? Consumption mainly picked up in where we didn't expect, Europe, United States, Africa. So there was a pickup in consumption. This also supported prices, give us support to prices. Now, consumption next year, will it pick up by the same amount, 2%? Well, this is hard to decide. We don't know what will happen with this China situation. We don't know what will happen in other countries, if COVID will hit again or not. But for the next season, we prefer to put in a growth of about 1.3% in consumption, largely surpassed by the growth in production. Next slide, please. As I said, the consumption growth is driven by Middle East, North Africa, and Asia. Here we have the consumption growth in Asia. You see the proportion of Asia. That's why China is very important here. Proportion of Asia is in this color, is in this pink color. Then the others have a smaller share, but they also pick up with good rates. So eyes on consumption on Asia and then on MENA countries. Also Europe, we see a pickup in consumption mainly due to the things that this locked-in situation finished. People are free to go to restaurants, are free to go to football games, are free to enjoy life, normal life. So this push consumption up. But we will discuss about this on the European slide. Press again. This we discussed. Next slide, please. Okay, now if we look at the macros, press again, please. This is the GDP growth, okay? We had 2 seasons when GDP growth was not there. We had the subprime crisis in the United States here, where GDP growth worldwide suffered, and we had COVID pandemic. You see, in case of COVID pandemic, the world lost much, much, much more than in the case of subprime crisis. Press again, please. This is the population growth. Here, nothing changes from one day to another. We have to keep in mind this. Look at the population growth rates in the past years and what is forecasted. We are not growing more than 1% per year. And combined with the GDP growth, combined with the zero COVID strategy, these 2 parameters are giving us a bearish influence, okay? Now, of course, also on the macros, we have the situation in Russia, Ukraine. We have these disruptions, okay? As a macro, we've seen that the crude oil influenced more sugar than these 2 parameters because sugar was really correlated with crude oil. Whoever said, okay, sugar spiked because of freezing temperature in Brazil, yes, it was 1, 2, 3 days. Funds added something. But then if you look on the correlation with crude oil, let's say on a weekly basis or on a monthly basis, but weekly basis, you see that sugar is there where oil is, right? So in case of a spike in crude oil, sugar will go up. Will sugar go up with the same amount? This we don't know. Generally the tendency is to increase lower than crude oil. Press again, please. We have the cumulative deaths. Also, COVID destroyed nations. Okay, we have America's about 3 million people died due to COVID, all Europe about 2 million, so on and so forth. Next slide. Top 6 sugar consumers. We see this big, okay? India is the biggest sugar consumer. Then followed by China, EU, United States. This not a big change here. India dominates the world in terms of consumption. We see consumption in 22-23 about 188 million tons, up from 185.9 this year and up from 182.2. Press again, please. And then here is the distribution on October, September per crop year. You see that India remained here. And India had actually an uptrend, a very good uptrend from here. The bar is going higher, while in other countries or regions is not so clear, right? Next slide. Well, these 6 countries represent 50% of the global sugar consumption. Next slide, please. Please stop here. These are the top 7 countries with the expectations. I don't know if it's clear for you. If it's not clear, I will insist on the right numbers and you will receive the presentation at the end. So up we have production, top 7 producers. Down here we have consumption, top 7 consumers. If you look at them, they are almost the same, okay? We have India there, we have EU plus UK there, we have Pakistan there, you have United States. So generally, production and consumption is handled by these big countries. So whatever happens here, look at, for example, look at the percentage in the world, okay? Production, these 7 countries have about 66% of the world production and about 54% of the world consumption. So if you look deeply into these countries, then you understand about 80% of the sugar market. Now, what we expect? Brazil, a production very similar to last year, mainly due to the sugar mix that will be lower. India, next year, probably 34.5. We are very worried to put now 36 or whatever people are talking. We need to see how the monsoon is going. We need to see how much diversion to ethanol will be. We hear 4.5 million tons, could be more. Let's hope that India could surprise with more ethanol. Then for next year, EU, UK, drop of about 70K in production. We have some problems in Europe. The problems are, one, farmers might switch more, not this season, but not 22-23, but 23-24, because grains are paying much more than sugar beet. This season, we had a problem, and probably we will see a lower surface and expected also some lower agriculture yields. We heard in Europe that Poland dropped the surface cultivated with beet by about 15%. France could be between 3 to 5%. So Europe now, if you look also on consumption, it will be short, Europe plus UK, EU plus UK. Why? Because we have, like for the first time in the last decade, we have an increasing consumption in Europe. Liberalization from COVID, okay? And we have incoming migrants from Ukraine. We have about already 4 million migrants or more, about 3 in Poland, 1 in Romania, and the rest in Hungary and other countries. Then they move internally into Europe. There were some forecasts that if this war continues, it will be 10 million. So imagine 10 million, they will add to consumption in Europe. Now, another country worthwhile to be mentioned is China. China had a drop in production, but this drop was due to lower sucrose level in Guangxi for the cane area, and drop in profitability and surface of beet in the northern part of China. Next year is expected to recover, and China remains kind of a bear now in the market because consumption could be lower. Now the rest, USA sees like Europe an increase in consumption due to the fact that people are now free to join a normal life. And Pakistan, let's see what Pakistan will do next year. In the preliminary figures, we have lower than this year, 6.6 million tons produced compared to this year, about 7.9. And then consumption is also picking up in Pakistan. We'll discuss later on about that. Press again, please. And those are the changes, okay, from the previous estimates. I don't insist on that. Next slide. Those are the risks on our base case scenarios. I said that for India, we consider probably a production that will be lower than what it will be realized. Now we have a risk of 1.5, who knows, 2 million tons up in India. It's just a risk. Up to the moment we reach the point, we don't know. The entire production, people are talking about 120 million tons of cane. We are working with 110 million tons of cane. Already is a big number, right? If they surprise, let's see how the weather evolves up to October, November. But another risk, bearish risk from Thailand. Then we have production in Pakistan. Will they reach the same level as this year? Farmers there are saying, and millers, that they will not reach. But there is a small risk there also. And then a risk on consumption to drop worldwide due to possible new lockdowns. Then on a bullish side, Brazil, we can see the mix cut from the current estimates of about 42.5 to 40%. Let's see how the ethanol parity will evolve. Then the crop in the EU and UK could lose more than 1.52% in terms of surface and in terms of yield. So because of fertilizers, so on and so forth, missing fertilizers, so then we can see a loss of 600K there from the base case scenario. And then better recoveries in the demand could be possible in Europe, USA, Africa, or Asia. Now, we also have a bullish risk, macros outside the fundamentals. Many traders are telling me, what are we trading now? Are we trading the S&D for sugar? Are we trading the trade for zero? We are trading crude oil, all of us. I said it's everything together. That's what a sugar trader has to trade now. Press once again, and then of course here we have the weather, okay? The weather remains a big risk, nobody can control this. And then we need a normal monsoon for India. It started well, but let's see how it ends, to have these quantities mentioned. So if the monsoon is not there, we have a problem. Next slide, please. Let's focus on CS Brazil. I know that India wants to know more about Brazil. Press again, please. Those are the estimates. Okay, we had the estimates since last year in December at 45.5 mix. Okay, now in the month of April, ethanol paid better than sugar by 400 points. That's huge. Okay, so if you are a miller or whatever, trader or whatever, and you hedge your production, now you said to the guys, internal guys in the country, look, I will do more ethanol for you. I will sell the same quantity that I sold already, I hedged, and pay me this. Okay, accept it. This means that they will receive quicker the cash, and they drop their positions. They are unhedged. Okay, it was a cost involved. And then don't think that it was the only cost. No. They have contracts with suppliers, contract with truckers to deliver a certain quantity when the season starts to the port. They have contracts with the port. This volume will move forward, right? So it's not as easy. But between, let's say, 250K and 400K, probably we're unhedged, okay? Now, we dropped the mix, 42.5. Could we go lower than this? I think the limit is 40. I don't think we can go below 40 this year. Press again, please. Now, what about the cane? Well, cane, whatever people will say, Q1 was a very good trimester, very good quarter. So it rained. Okay, we are not at the rains, historical rains, of course. We came up from a dry season. But we are also not talking about 595 million tons of cane. We are talking about 560, right? So probably we'll have 560. Frost episodes, let's see. People are dramatizing things, right? The truth is the most important. You need a frost episode not for 1 day. You need it for 3 days at very low temperatures and impact everything to have a big impact. Not like this, you see the news, you buy the news. So, this means 31.9 million tons of sugar. Very in line with this year. We have a risk of a bullish scenario going with a mix at 40%. And we have a bearish scenario if the mix goes back to 45.5 sugar mix, if sugar starts paying better than ethanol. Maybe it will be too late, but there is also a risk here. Next slide, please. And put the other chart too. Here we have 2 charts. This is sugar. This dotted line is sugar. New York. And this is ethanol. Hydrous is blue, blue color. We see that sugar paid better than ethanol, yes, no doubt. But where we are now? Where we are now? If we had a cash premium of 10 points, we see sugar paying better. What ethanol prices are doing internally? Here is ethanol only. This is sugar with ethanol. Here is ethanol, okay? In Brazilian reais. It's dropping will drop further? I think so. Why? Because at the pump, gasoline is more competitive. 72% is ethanol, right? So you need a parity below 70% in Southeast region. So gasoline pays better at the pump. Will Bolsonaro rise gasoline prices when it's an election year? He fired the guy from the ministry that he allowed. I don't think there will be another revision upwards on gasoline. Whatever will happen in the world up to October. After October, we don't know, because elections are in October. So now the crop is delayed this year by, I would say, 20 days. Put it there, roughly. Now we will see most of the volumes coming. It will be ethanol, ethanol, ethanol. In the beginning of the crop is ethanol. Now, will this ethanol put pressure on domestic prices? I think so. Okay, inventories were low. I agree. They are replenished inventories, but after, if the demand is not picking up, what we do? Press again. This is the calculation on 16. We have May and June. New York and cash premium. We have here hydrous parity. We have the real, and here we have the result. 1, 2. Clearly, you see, it's sugar paying better. Not too much. There was a correction in sugar prices since then. Okay, maybe now ethanol pays better. Not this is the important thing, that for 3 days sugar pay better or ethanol. Is the big thing. Will you get out of your hedged sugar for this? No. Press again. Next slide. Press again to see the charts. There are 2 charts here. Okay. Agriculture yields now. This chart is with agriculture yields per year, and this one is per month. Okay, in Brazil. I said the current crop is slowed. There were lower replanting rates in the dry weather. Yes, we agree on that. Cane could be older. But the rains helped in January to April. Okay, this would mean that we will still remain low with the yields. Look at the yields. We stay low, below the average, below everything. But a bit better than last year. Not too much, a bit better. Probably in the region of 71.5, 71.6 metric tons per hectare, probably there, okay? We are still far below 77.9. Yes, but this will give about 560 million tons of cane, which is not bad. A small recovery, 30 million tons, 35. Next slide, please. Now, the other chart, please, also. One more click. Yes. Here we have production and consumption. Consumption per quality. Okay, we have VHP. We have crystal sugar in blue. In blue is crystal sugar, VHP is in pink, and the other one in gray. Okay, internally they consume white sugar. I didn't hear in Brazil somebody to do an extra quantity of whites. They are focused all on rows. That's what they do, rows. So they consume their whites, and then for exports doesn't remain too much. I'm not talking about refined, because refined availability for export is not big, it's 300K. Maximum 350, 370. And next year will be less. But I'm talking about crystals, crystal sugar, 150s. Okay? They consume their whites, they will export probably 3.5 to 3.8 million tons, and that's it. Then the differential will be made on rows. Now production. Consumption, you see, is stagnating. Doesn't come up easily. Production, pretty similar. And the distribution, pretty similar, right? I mean, same amount, almost the same amount of VHP produced, and almost the same amount of crystal. Press again, please. So, you see the numbers. Almost 32 compared to 32. 65.4% of sugar produced to be raw sugar. Next slide. Let's stop here. Good. Here we have the estimates in the base case scenario, bullish and bearish, okay? The estimates in the base case scenario show an export availability of about 20.5, 21 million tons of raws, about 2.6 million tons of crystal sugar, okay? And the rest very infime. It's high quality wise. Now, crystal sugar, domestic market, paid better than the world market. So I would suppose that more crystal sugar will be destined to the internal market and less for exports. Maybe 200,000 difference, 250, 300 there, because crystal sugar was supportive, domestic market. Then, in the case of a bullish scenario, the export availability will be only about 90 million tons of raws and 2.4 of crystal. The bearish scenario is with a very big sugar mix, which I don't think it will happen. 22.7 million tons of raws and 3.7 crystal. Press again. The change from, here we see the change from the previous estimate, the small chart, which saw an availability of VHP of 22.1 million, but we slashed production due to a lower mix. Press again, please. So, base case scenario, in total, 23.4 million tons of sugar, tel-quel, everything together. Bullish scenario, 21.4 million tons of sugar to be exported out of Brazil. And bearish scenario, a big number. Next slide, please. This is the monthly, press once more. This is a monthly expectation for Brazilian exports. VHP and low quality. We see here that there was a delay in the crop, so there was a delay in export. There was an export pace. Now, these numbers are according to the availability of raws in the country, according to our model, predicting how much cane will be crushed per month or per bi-weekly, whatever. Now, for this to happen, we need the buyers, okay? To have here, for example, in June, 2.5 million exported in September, we need the buyers. We need somebody to buy this sugar. Who will buy it? China, Chinese yuan is down, lost a lot. It's almost 7 with a dollar. This makes the import arbitrage drop 16.4 cents. Opens the arbitrage with China for VHP. Where are we with the market now? Who can buy? Refineries. Okay. Yes, who? Al-Khalij, the normal refineries, Algeria, Nigeria, Morocco, Iraq. Yes. Maybe Renuka, or maybe not, because freight is expensive and India has big production. So that's how we see it. Press again, please. Low quality around 0.25, so 250K, including containerized sugar and convent sugar. Next slide, please. So that was Brazil. I hope was clear enough. Next one is India, the new Brazil. Press again. We see a tremendous job done by the government here, and I appreciate this. Ethanol in pink. Bravo. Keep on going. Don't spend money with crude oil imported from other countries when you can develop your own program here. And it's a cleaner fuel. America did it, Brazil did it, Europe did it. Next, yes, it's good. Next season, a bit lower than this one. Let's see if the monsoon is good. We might get higher. But also ethanol allocation might get higher, 4.5, 4.6. Why not? Very good job. Now, the supply and demand balance, this chart shows on the right-hand side, only the difference between production and consumption shows that, again, sugar will be added here in India, okay? We'll have a surplus. How we manage this surplus? Press once more. Why? Okay, water reservoirs are good if we have normal monsoons. Maybe 34.5, maybe more. Let's see. Press again. There is this bearish risk that acreage might further increase, as we saw that cane is paying very good. Cane arrears are not so big. And then we have also a bullish risk, I would say. We have more ratoon cane, and we know in Maharashtra, okay, and Karnataka. This means probably lower agriculture yields. So maybe we will not see a production as high as we saw this season in Maharashtra and Karnataka. Other regions could bring this production higher, but there's not much upside, I would say, in UP, right? The others, yes. So that's why I think 34.5 for now, it's a fair number. Next slide, please. Now, and press once more for the other chart. One more, please. Good. Here we have the stocks, end of season stocks. Everybody knows this. Big stocks here, dropping. Why? It shows here. We are dropping. Stocks will be lower, right? This means it's a bullish signal, right? If you end up with stocks below 6 million, and we go, let's say, to 4 million, then the government will do something. Oh, we need imports or whatever. So that's the situation, considering 8.1 million tons of exports for India next year. Press again. Okay? For this year, about 9.5. Next slide, please. Press once more. And once more. Okay. Here we have, you have here defalcated in raw value, whatever. And here we show the level of stocks. It's a bit bigger than 6 million because we consider a bit of imports from Brazil. If the arbitrage will open. If it's not opening, then these volumes will not come. Next. This is per quarter. You will see it at home or at the office. Next slide. Thailand. Press more and fill the page. Okay. Risk of a higher production we discussed. 120 million tons of cane. This will, depending on the yields, okay, we have upside potential for production there to 13.3 to 13.75 million metric tons. Okay, that's a big risk. Next slide, please. I have to finish. I'm informed that I have to finish, so I will just focus on the main things now. Pakistan, please fill the page. Another one. Okay, and another one. Good. So here we have consumption also witnessing a big recovery in Pakistan. It's the same as India, right? Consumption, demand at 6.17. is the record high demand in Pakistan. Then next year, demand to grow further. Will it be more than 623? Okay. Production this year, 7.9. Expected at 667. What will they do with this 1.7, 1.5 million tons? Maybe 300K will keep in stocks, but the rest has to get out of the country, right? So this is a bearish risk. Next slide. More. China. Structural deficit is lower, okay? Structural deficit, differential between production and consumption. We are at 5.55 million tons of deficit for China. Next season, 4.9 million tons. They are sitting on huge stocks, but they will have to import something. Why? Because they have these AIL quotas. If you are a refiner and then you don't use the quota, then the government will cut your quota for the next season. So they will import also at a loss, but not a big loss. Next slide. Fill the page more. Structural deficit in the EU, UK, you see here. They need imports. Part of it, Ukraine, part of it, world market. Europe is a good market to export. Next one. Fill CIS situation. Consumption not increasing too much. Production to recover, not too much. Please fill the page. Another one. Because, okay, they will have bigger surface and yields. They don't miss fertilizers. But they will have to use their beet to produce seeds because they take seeds from Europe, and Europe doesn't give them now nothing. Next slide. US market in deficit to be provided by, there is a differential. Here we have the differential between New York 16, domestic market in United States, and New York 11, and we see that gradually spiked, went up. Why? Because they have a deficit, they have higher costs, production costs, consumption is recovering there, okay? And another one, and that's it. Mexico, sugar production is higher. They have the availability to export to the US, and I've heard that the quota have been increased for Mexico and for other countries. And I think there is another one, and it's ending. This you have all the figures. Sugar exports, fill the page, please. Okay, we have here the exports to Puerto Rico. They will have a bit more quota, but if not, they will also dump some sugar into the international market. Thank you very much.
I'm so sorry. Thank you very much, Mr. Claudio. I'm so sorry. We run short of time, hence I had to interrupt you. I apologize for the same. I'd now like to invite Atul Bhai, please, to join the panel. And Ravi Bhai, kindly join the panel. Atul Bhai, please. We're having a quick session where Rahil Bhai is going to moderate, and maybe there'll be a Q&A, but we give you 7 minutes. Thank you. To all of you, you have to divide it.
Hello. Thanks, Claudio, for that wonderful presentation. While seeing it, I just thought of something which is very terrible to read, but it is. On a market which says, this suspense is terrible. I hope it lasts. So like any production number, any consumption number, it just forever for us. It keeps changing and elaborating at all point of time. I would like Kona. I think the world is currently engaged with India, Brazil, and the macro on the Russian side. What do you think will be the average mix this year? I think this is the most hardest question. And what do you think will be the average ethanol parity this season? If you can answer this, I think that's the key where you can start to benchmark for everyone else.
Thank you, Rahil. I wish I could give you a straight answer. But as always, these are very loaded answers because it depends on so many variables. At the moment, EDN-FMAN has a number of 43%. Okay? You had 42.5. We have 43%. But honestly, we're just 1 month into the crop. It's very delayed already. The Brazilian real is as volatile as it's ever been. It's going from 5.2 to 4.9. You know, it's really, really difficult to predict. We have elections coming up. We have a strong commodity-based economy. So the Brazilian real could be very bullish, go all the way to 4.7. But on the other hand, it could go to 5.2 if Lula wins or Bolsonaro wins. We don't know. It's very, very difficult. Then you have the weather. And then you have the crude oil prices. So today China is in lockdown and crude oil is at 110. When China comes out of lockdown, crude oil could go to 120. But if Beijing and then Shanghai goes back into lockdown, we could go to 90. So to answer the question, 43.5, but really it's too risky to give you one number. It's really, we should be looking at, I would say 42 to 43.5, I'd say would be your range. I can't see it going higher than that, but ethanol is a question.
Thanks, Kona. Thank you so much. Zingyo, I would like to ask you a question on two countries. I think one is China and one is Thailand. I think Thailand went down and then bounced back. Will you be able to help us? What do you think Thailand will produce next season? And do you think it will grow like India have done this season? Do you think a continuous growth over there? And on China, which is again the most unknown thing for every one of us, is with the lower crop and Claudia showing 16 million tons of consumption. 16 million ton of consumption? So do you think that they will be importing a lot of sugar or HFS, whatever they do? If you can help us with these two countries and its question.
Yeah, thank you, Rahi. So I'll start with Thailand. So Thailand has been experiencing a 2-year drought about 2 years back. So we have seen Thailand's crop start to rebound the year before this year, so last year, and this year as well. So a lot of that is, the cane has been replanted, and the area has been fully utilized again for cane, because cane is such a relatively easier crop to be managed. And what we see for next year, yes, we are actually, sharing the same view as Claudia. It's exactly the same views. A lot of depends on the rainfalls. So like what we see in last year in India, the yield has been tremendous. So Thailand, so far, the rainfall has been exceptionally good. So we are on track of, Thailand producing another large crop again, because of the rainfall, because of the payment to the farmers has been guaranteed. The farmers are happy with the price. Area has been reutilized. So yeah, I think it's pretty much in line. We're going to see a bigger crop for next year for Thailand. Yeah, and for China, China is interesting. So this year we see China's domestic crop has dropped to one of the lowest in the last 3 years. So somewhere around 9.6, 9.7 million tons of sugar. But on the other hand, China has been over-importing sugars in the last 2 years. We're in between of a price effect as well as a deficit S&Ds. So if you look at the margins for Chinese import, it's now somewhere negative $70 to $80, maybe slightly more because of the price rally now. So at these levels, the private refineries will suffer by importing sugars. But on the other hand, they need to import, as Claudia shared as well. They need to fully utilize the IP, the import permit has been given. So probably we're going to see the Chinese come at a price when the market has a dip and buy some sugar for their domestic. Whether they're going to import more than last year or same as last year, I personally don't think so. Probably they need to reduce a bit of the import. They still have the sugars being stored at the port, carryover from last year. Maybe they utilize that as well. So yeah, so that's how I see the things.
Thank you for that. Atul bhai, one question to you which is more relevant with sugar cane and edible oil. I think that will make the next India scenario and much easier for the government as well. Will we ever get cane area sacrificed to soya or to any other crop, especially since we have the national edible oil policy in place and more growing of it. Will that ever happen? Because that's going to put a long term, whether we are structural exporter or not the exporter.
Thank you, Rahil. But before I answer your question, I'd like to mention only one thing. I think we need not give too much of importance to S&Ds. There was a friend of mine from Wilmar, he was a director in Wilmar, Singapore. He once told me, and those are very prophetic words, what he said was, Atul, nowadays S&D contributes only about 35 to 40% in the price discovery. The balance 60% is all extraneous factors like currency, US dollar getting withdrawn back, and US interest rates hardening, which is negative commodities, then political risk, and God knows how many risks. So a trader needs to also look at the other factors apart from only S&D. Otherwise, if you're only working on S&D, some other thing happens and then you're gone for a toss. To answer your question on whether oilseed would gain over cane, I don't think that's going to happen. That is not likely to happen for the simple reason that the cane farmer is probably the most affluent farmer in this country, apart from maybe some horticulture guys or whatever. On an average, if you take a soybean price at say 50 rupees a kilo, on an average, today maybe about 70, I'm taking 50 rupees a kilo. And Indian production is less than 1 ton per hectare, which means he gets only 50,000 rupees as revenue in one season. He may use that same land for wheat as well. And wheat, the average may be about 3 tons per hectare, another 60,000 rupees for wheat. So in total, he will get only about 1.1 lakh rupees for the full year. Now move on to sugar. Sugar, on an average, the FRP works out to something like 32 or 33 rupees after making the adjustments for sugar recoveries and blah, blah, blah. FRP may be lower, but then you end up paying more because of the higher recovery in sugar. And on an average, our production, I'm sure you know better, maybe closer to 80 tons per hectare. So even if it is 80 tons per hectare, 80 into 3 is 240 plus add another somewhat, so 250 to 275 vis-a-vis soybean and wheat combined at 100 or 100. I don't think that's going to happen. It's not going to happen. What should happen, and which is what we've been propagating for quite some time now in this country, is we need to incentivize our Punjab, Haryana farmers. They were at the forefront of the green revolution, and they are the ones who should be at the forefront of the yellow revolution if India has to get some semblance of Atmanirbharta as far as edible oil is concerned. So maybe we need to incentivize them and give them adequate support in terms of marketing. So that could be a game changer. Cane area, I'm sure is not going to come down because the farmer is assured of a buyer, he's assured of a price, and this year example is in front of everyone. Maharashtra, we thought, would not be making as much sugar as it is, and that's what I understand from you all is that a whole lot of farmers actually planted cane but did not get themselves registered. So I think cane will continue to grow, and secondly, the water table, as Claudia also mentioned, water table in Maharashtra and Karnataka is reasonable. The dams are full, so there's no reason why the next year's production should be lower than this year's production. That's our take.
Thank you, sir. तो अपना धंधा safe है. Atul bhai, I was Ravi bhai, I have a question for you. I'll just take 2 last questions because we are already late. So I'll need you to answer one question. Indian export now from last 1 week, it's kind of a very suspense scenario for everyone. And as I mentioned, it's terrible, but though it is. What would you put your number on export as of now so that we have some clarity onto it? Secondly, as the millers, we have now become more efficient in early startups and ensuring supplies available every month. We don't see shocks and shocks absorber nowadays in domestic market. Do you think with such kind of suspense, do we create it ourselves, or do we need to sort of ensure that we discuss with the government at all point of time?
Thank you, Rahil. Most controversial questions comes to me. So, I think as far as exports is concerned, the problem with us in India is that we talk too much, we analyze too much. And I agree with Atulji on that matter. All the time, S&Ds and reality of exports today, the numbers which are floating around, 8 million ton have been exported. I don't agree with that number. Because if you look at 7th May exports, actual exports will not be more than 7.1 million tons. The 8 million number which we talk about is the dispatches from the mill. It doesn't mean that it has been exported. Some of it is lying at the port. Port stocks are around 500,000 to 0.6 million tons. Some of it is also lying in refinery like us as raw sugar or white sugar. So that is the scenario as of now for the exports. And second thing is that in this stage itself, everybody raised one issue of the transportation, local transportation. The rakes are not available. I think the exports will also be compromised because of the logistics. Till now, we were exporting from the ports which were approachable through the road transport, lorries. For example, from Maharashtra, from Jagad, Maharashtra to Angre, Maharashtra to JNPT. Going forward, as the monsoon starts, these ports will not be able to export. So obviously your export capacity will be highly compromised. And so the raw sugar exports as such is out of question after 1 month, because the mills by nature produce raw sugar only when there are advance orders. Since the mills will be closing, raw sugar will in any case go. So I am not one of those who is very gung-ho that India will suddenly export 10 million ton sugar. Somebody tells me 12 million tons. It's not going to happen. I can tell you with the experience of the Kandla refinery, our vessel for white sugar itself are waiting for last 40 days. So you may have surplus, you may want to sell, but ultimately export will only happen when the material reaches the port and gets shipped. So I am not one of those who are very high export figures. And also, another thing to keep in mind that in this 7 million ton of export, which I am talking about, mostly it was raws. 4.5 million ton is raw. And going forward, we do not have raws. So while we should monitor exports, but at the same time, being over-optimistic may lead to wrong decisions. So that is one part of the question. What was the second question, right?
I said the domestic market seems to be very stable with us, and we start the crop too early nowadays. We don't wait till 10th of November, 20th of November. So nowadays we start early. So our closing stock is quite sufficient because millers have become more efficient. Is it the right statement to sort of advise everyone?
I am quite, generally very, very vocal in my assertions. I will only say, so long you have stocks in the country, and if Sarkar wants the prices should not rise, you can just forget it. Price will not rise. So I am not concerned at all about the rise in prices in this country at all. Because even if I assume that all of you are correct that 10 million ton export happens, still we will have 3 months stocks at the end of this year. And I am more in Atulji's camp to say that the stocks will be higher than 6 million tons. Because we see these problems day and night. And even at 6 million tons, so long you have this stock in this country, we have very, very capable bureaucracy who knows both carrot and stick. So if carrot doesn't work, they have the stick with us and they will manage the prices. Thanks.
Can I add to whatever Ravi has said? I've been associated with the edible oil industry and grain industry all my life. But it's only in this sugar industry I keep reading and keep getting messages that India has contracted 1 million ton of exports or 2 million tons of export. We've been in the export business. I don't think I have ever shared what we have contracted with anyone. How does the industry or the commentators know how much India has contracted? And this is something very funny and it beats my imagination.
But it still hit that ballpark number, you see. So Atul bhai, the offline is the broking system in our country is what reveals the contract. So basically, all the mills which sells have a massive broking lobby which works across it, and that's what relays it.
In all the agri-commodities, there are brokers because you cannot ignore the broking community. But I don't think anybody shares their export numbers or contracts. So I'm not too sure about those contracts being touted around. Anyway.
So last question is Claudia for you, is on fertilizer, the problem which we all face. To what extent the production in the world could be reduced with those high fertilizer prices? And with Russia situation and Ukraine, do you have anything on to talk about direct effect on the sugar S&D?
I take the second one first. Apparently in Ukraine now they managed to plant. Okay, so they might export some sugar to the EU. Maybe people already slashed too much production in Ukraine, and the thing is, okay, war is not everywhere, right? So you have peasants, you have farmers, they are working, right? Maybe, okay, the surface, because you know in a war, truth, nobody knows the truth in a war. But for sure they will produce and they will have extra, because they lost also consumption with these refugees. So they are, from this point of view, an exporter. Russia has to replenish stocks. They were short like 300K, 300 even 50K. Not really shortage, but they have a buffer zone of stocks. And they took from Brazil. Probably now, I don't know, in the CIS countries, this 1.5 million that will be released from Pakistan maybe will add their part of it. So in this thing, I mean, I don't think Russia will be an exporter, only Ukraine to the EU, and next year will be more balanced. Now on the fertilizers, Russia has plenty of fertilizers. Some countries, they try to replace fertilizers with whatever domestically they had, whatever solution they had. Now, fertilizers now in Brazil, for example, I heard that they did some agreements with Russia, and they will receive fertilizers. They give them some sugar, okay? So this trade is going. It's a bit of a problem when Russia has to pay for the sugar, this I've heard. It's not easy to pay under these circumstances. So I don't think in Brazil it will be a very big impact. But other countries, yes, I agree. Other countries, if you are missing fertilizers, then you will not have the same agriculture yield, right? So in this sense, maybe we will have a small impact in Thailand, because that's the main problem now. India solved the problem on their own. But Thailand, I'm not really sure that they have solved enough, I mean, everything. And we have to focus on the big crops, right? So we might have a small surprise to the downside because of that. But let's see how the situation evolves also, right? I don't know if Kona has other idea.
No, I broadly agree. I think Brazil is going to find a way to do it, but Thailand and other producing countries are going to struggle. And I think you have to expect some kind of yield loss as a result.
We have time which we have sort of, I think we are overextending it. So I would like to end this session with, thanking Claudia for a wonderful presentation. Kona, as usual. I mean, we miss you if you wouldn't have come today. Zing, I'm grateful for you as well. Atul bhai, as always, thanks for the input, and Raviji, thank you very much.
Thank you so much. May I request you, gentlemen, ladies and gentlemen, to kindly stay on stage for the presentation, please. So, Rahil bhai, may I request you to kindly honor Ms. Kona Haq, please, first. Thank you very much. Thank you. Thank you. Ms. Kona Haq. Claudia and then Gian. Claudia and then Gian. Thank you so much, ma'am, for your kind participation. Big round of applause. Thank you. Yeah, Mr. Claudia Kovrig, sir, thank you very much for your presence. We're going to have a short session of 20 minutes, so hang on. And we'd like to also honor Mr. Zhang Yu Kao, please. Ravi bhai, thank you. And a group photograph after that. Ladies and gentlemen, a big round of applause for our panelists who shared their knowledge with us, and we gained the knowledge from them. Thank you so very much.